Welcome to the end of day review for Friday, the 22nd of December 2023. As usual, starting off with the economic calendar for the London session specifically, we actually had some GBP news, retail sales, which was a significant red folder news event. As you can see, the result was positive, enabling us to actually trade long in terms of our long bias. And then in the USD, I guess in the US session we had PCE price index that came out 30 minutes into the session, and then we had UOM consumer sentiment that came about 2 hours into the session. In terms of the news, the red folder news in specific was negative, which then aligned to our long bias that we had for trading GU, and as you can see, um, both GBP and USD news essentially supported that we actually long GU for today. And then obviously 5 p.m. news was fairly neutral and didn't really indicate anything of concern at the time. But yeah, there was a certain number of observations that I made and things that I want to look into some more as I continue on this trading journey. But perhaps just to quickly have a quick overview of the 4 hour, we do have confirmed bullish market structure that hasn't really changed over the past week, which I guess is a good thing because the pro trend idea is quite clear and obvious. In terms of where we were trading from for today, we were essentially right around here for the London session, and then momentum kicked in, brought us a lot closer to the high. However, it didn't follow through, and in terms of understanding why that may have been the case is perhaps if we quickly just glance at how the week has performed in terms of the 15 minutes. So as you can see, Monday essentially created a low of the week, and then Tuesday created the high of the week, and then Wednesday was fairly neutral, neither taking out the high or low of the week, and then Thursday confirmed the low of the week. Created a new low of the week, which essentially confirms that this will more than likely be the high of the week. Perhaps for some background as to why I'm saying this is because in terms of my data analytics on FX data, you'll be able to see that the high and low of each week is usually formed between Monday and Thursday. And sorry, not Monday and Thursday, Monday and Wednesday. So depending on what Thursday does, it's often an indication as to whether we're actually going to have a bullish or bearish week. And in this case specifically, Thursday made a new low of the week, thus invalidating Monday's low of the week, which would have been the premise to support that the week was going to be bullish. In this case, Thursday essentially confirmed to us that the week is going to be bearish, which then means, actually coming into trading Friday, uh, it doesn't really make sense to take longs, or longs are somewhat high risk. And in terms of reducing that risk for Friday longs or trading against the weekly bearish closure, we typically can have consecutive bullish or bearish candles to somewhat support that. Okay, in terms of the weekly candle, today we're more than likely to actually create this the week of the weekly bearish candle. Obviously, as you can see, this week has been somewhat anomalous in that we might actually close bullish, um, even though Thursday suggests that we're actually going to close bearish. But at the same time, it does explain why price didn't continue upwards, because it's more likely than not that we're actually going to get that bearish candle. And while we may not actually get a bearish candle closure, we might have this inside bar which is bullish. But technically it is somewhat of a bearish week or an unconfirmed direction week. Whereas if we actually went and closed higher, or at least wicked higher than this candle, then we could say for sure that it's actually a bearish week or bullish week for that matter. Yeah, so that essentially gives us some idea of why we didn't actually go ahead with this target. And having taken that into consideration, especially around 4 p.m., I was like, okay, I realized that I'm actually trading against the weekly trend at this point, especially on a Friday where it's fairly obvious what's actually going to happen for the week, and thus actually targeting this level that I was trying to target doesn't really make sense, because if it is, and the probabilities are stacked that this is actually going to be the high of the week, then the chances of this being wicked is quite insignificant. And for that reason, in addition to it being late in December, it just makes sense to take any profits that you can. And I was lucky enough to actually get a 1 2 3, just maybe just under 1 2 3 P&L for that. But overall, what I'm thinking is, going forward, if I were to take the weekly bias more seriously, this Friday in particular would have been a short only day. And obviously, per our technical analysis, you know that we can only long because we don't have validation um, for the pullback phase, which would have meant that we wouldn't have taken any trades for today. And to be honest, on a Friday, when things are where things are not always the best situated, and volume tends to run out quite early in the day, it's not a bad idea to maybe sit out of these types of trades. So going forward, this trade will probably be invalid or not per my trade plan, simply for the fact that you know bearish week, we don't have consecutive candles, daily candles, to suggest that we might get that weekly reversal wick formation. So in that regard, this was probably a invalid trade. But as my trade plan is as it stands, it does indeed fit my trading plan. So I think that's enough waffle for today. But maybe just to actually go into the detail of the sessions. So from a 4 hour perspective, I did explain that we are in this bullish market structure trend. We did reset the primary leg simply because we wicked below the original primary leg. This is a 4H primary leg, so these OBs remain valid so long as they're not POI broken. Because the original one was wicked, we could then restart the primary leg, which is how we were able to actually get into the longs for today. In terms of positioning ourselves, the fibs were aligned to the Asia low of today, and that was primarily because we actually extended the primary leg. So if you look at it coming into the day, the primary leg would be there, and then as you can see, when Frankfurt opened and GBP news release was released, we then extended the leg with a body break. At that point, I was happy to actually align my fib to the Asia low of today, on the premise that this low of today is more likely than not to hold. And then yeah, we essentially got into an entry here. Like I explained in the London outlook, whilst there wasn't liquidity in the leg, the fact that we got POI and fib alignment made it make sense to take the entry. And I explained that liquidity in the leg is usually a factor for stop loss placement and less so for entry placement. Obviously, if you're going to factor it in, then sometimes you're going to get into trades with smaller stop losses, and other times you're going to miss those trades. And you've got to ask yourself, is if you miss the trades, um, is this going to have a psychological impact? Like, for example, let's say you're sitting in a 3 losing streak, and you find 3 winning trades, but you wasn't or were not tagged into those 3 winning trades. simply because your stop loss was below liquidity in the leg and price never came to it. So at that point, how are you going to feel? Are you going to be able to stick to your trading plan? Are you going to start FOMOing? These are all considerations that you need to take into account, and it can get challenging, especially when you're actually going through that. Like, speaking about it, in hindsight, is you or hearing about it from someone else is probably not ringing the bell or hitting home that hard. But when you in the you know in the deep end, then you tend to um, yeah start questioning yourself, and you really don't need that in your trading. So that's quite important. Yeah, but essentially I got into this trade that I did go into detail in the outlook, but I priced my stop loss here simply because, just to give it a bit of room that if we actually wick this liquidity in the leg and perhaps the Asia low of the day gets wicked, we do have some buffer to actually stay in the trade, with the idea being that if I'm wrong, then I'm wrong once and not multiple times. And then moving towards the New York session, I was considering areas to look into for continuations, but this was a possibility that I did highlight. But like I said, if I was going to take a continuation, it was likely going to be closer to this fib, and then your stop loss is probably around this fib, and then it's a question of, okay, well, at this point, are you sort of negating the whole idea of your break even, because you're taking this entry but invalidating this one. um, it's not an ideal situation, but if you were comfortable with it, I think it's a bit of a judgmental one, because it is sort of valid at the same time. It's just about where you're going to position yourself and if you're happy with your stop loss. So, for example, if you're happy with continuations here, and then you're like, okay, well, if we're in a continuation momentum scenario, price shouldn't come that far down, and you'd put your stop loss here, and then obviously New York news comes out and you're wicked out, you'd probably feel pretty crappy. Um, and then obviously in terms of how I would have taken this, I would have taken it there, and I'd be happy with that, because my entry into the second position wouldn't invalidate this position immediately. Like, there is some space for price to travel. My stop loss would likely be on this 11% level, purely for the fact that we in a momentum scenario, we only have one direction to trade. It doesn't really make sense to have a extreme large stop loss. But the thing that invalidated it for me was because in this continuation would have been triggered in the New York session, and at that point I have to consider previous session liquidity. So if it was triggered in London, great, I'd keep it open. If it's in this case, it would have been triggered in New York, and the only way I could actually take that trade was if the London high was actually London previous session range. Liquidity was swept to the top side, and then we came in and then continued. But in this case, it was unclear who's actually, or which side of the previous session range was going to be liquidated. So that was an important factor for me, and that's what prevented me from taking that continuation. In terms of the original trade, I was lucky enough to be positioned reasonably well, such that this news didn't actually take me out. I think it was about zero point 0.6 pips, well, actually one and a bit pips. So on average, GU spread is between, let's say, zero point 0.5 and 1. So I was lucky enough to actually stay in this trade. And then, like I said, I towards the end of the day, I was like, okay, what are the chances that the weekly high is going to be taken, on the presumption that this week is more than likely a bearish week. And for that reason, I did close the trade right around 4 p.m. my time, and I managed to get just under 123. um, yeah, but like I said, I am considering re-evaluating my Friday approaches. But yeah, I think food for thought. If it doesn't resonate with you, then Yeah, there's no need to change your plan if it's working for you. All right, that's the end of the review. That's yeah, I think this is perhaps actually maybe I should just say this is, now we're coming to the last week of December. There's a lot of holidays. Um, a lot of the markets will be closed. There's banking holidays and whatnot. So for the next week, I will not be doing outlooks for London and New York. However, I will be doing end of day reviews, but I won't be doing end of day reviews on significant holidays like Christmas or New Year. So yeah, I just thought I'd let you know on I'll know about that, and obviously everything will resume full swing from the 8th of January 2024. Cool. To whoever's watching these videos, happy holidays, and yeah, we'll chat again.